And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update. John, things are happening. This market is starting to percolate. Let's get right to it. I'm looking at Manhattan supply, 6,173 things. Show me that chart.
Yeah, that's an increase of nearly 2% on supply. And supply, we started finally seeing some upticks back in late January. We're still continuing that trend, but it is a slow upturn here in supply.
Yeah, it's barely doing anything. It turned around and it's just kind of hovering above these sixes. It's certainly not shooting higher anywhere. And if I'm a buyer, I'm probably feeling that there's not a lot of new stuff out there that's coming on. Let's see if that changes, Johnny. But what I do see changing is that demand, that Titanic pending sales measure. It is now at 2,240, and it looks to me like it's ticking a little higher. Johnny, show me that chart.
Yeah, now we have had 2 consecutive weeks of upticks here, and the pending sales number up nearly 2% on the week. And again, we're still well below where we were previous years, but it seems like this uptrend, this nascent uptrend, is starting to set in a little bit.
Yeah, and I think it's going to be here for a little while. I think it's going to be here for a little while, and that's going to be the topic of the next few minutes of us talking. Guys, keep an eye on this market pulse at 0.36. If this pending sale starts to go higher and this supply stays where it is, you're going to see this number rise, which basically means that buyers are going to start or are starting to lose their leverage advantage. Johnny, let's not forget that we were at a much higher level last year, and we have come down, and that looks like it's bouncing back. And if I go to the weeklies, Johnny, and I look at supply, let's start there, 309 things, that's down a couple ticks. Johnny, show me that chart.
Yeah, it's down about 3%. And again, this is a holiday week, right? You had schools out, you had the President's Day on Monday. So usually this week we see a little bit less of everything. And here again, we're seeing it supply still over 300 though. So it's still coming in at a slightly lower pace, but it's close to trend here.
Yeah, I'm glad you pointed out the holiday, the shortened week, and the kids are out and things are a little light this week. We're going to go take a look at the monthly trend in just a second, but let's switch over to demand for this week. We have about 199 contracts signed. That's definitely down, in line with what Johnny was saying. Johnny, show me that chart.
Yeah, that's down 16% or so. And again, that holiday shortened week probably took a few off of there. Really close to that 200 level, though. That's kind of what we're looking for in an active season. And, again, you start looking at that trend, you can see there's a clear uptrend in the number of contracts signed. So as we enter this busy season, we're on trend.
Yeah, and that's what I want to talk about right now, because 1 week is not a trend make. You look at this 199, you look at this down 16, you're like, oh, that's terrible. I switched to 1 month. I switched to that 30-day pace. We are in the mid 800s, Johnny. That is up a 78% over the last 30 days. We are rocking. We are rolling. I remember about 3 weeks ago, this was in the high 500s, low 600s. And we were talking just about 2 weeks ago that there was anecdotal reports of all that activity, and we were waiting for it to come into the pipeline. It looks like it's coming right into the pipeline. Now, this is supposed to be around 9:35 by the end of February. That's where we're supposed to be historically. So we still have work to do. There's still 4 days left. It's possible we get close to that. And considering that supply overall is tight, let me just show you. This is that 30-day liquidity chart, Johnny. That is that 858 number. And I want to point out, again, everybody knows that we were at this level last year, and that is a seller's level. And we know we shifted way down, and you can see where the buyers got their advantage right here. But take a look at this recent trend. It is spiking. It is wasting no time, spiking higher, and we're out of the low liquidity zone, and we're now in the neutral liquidity zone, which tells me, buyers, you're losing your leverage advantage in real time as we speak.
Yeah, no, this has nothing to do with price action. This has nothing to do with sort of, optimism or pessimism regarding the market. Yes. This is really just sort of, we're entering the busy season. That liquidity has shifted right back to the neutral zone, which is where you would expect it to be. So this, to me, this trend says that right now we're operating in a much more normal market than we were 2-3 weeks ago. Even a year ago. I mean, you think back to the peak as you were highlighting the sellers markets. That's not a normal market. So we're kind of shifting back. We're kind of in that liquidity pace where buyers still have a little bit of advantage compared to where they were, but it is, as you say, fading as they're more entering the market.
Yeah, and I'm so glad that you brought out that this is not price action. This tends to lead price action, but it's not price action. Doesn't mean prices are shooting back up there. But if you think about what this is telling you, this is deal volume, and deal volume is bids, and bids means sellers are getting activity. And you, again, you combine this with what the brokers are telling us. I mean, we're having these roundtables. We're talking about, Phil does his clubhouse. We're doing these things and sharing it, and everyone is saying the exact same thing. There is a big pickup in anecdotal buy side activity, and there's not a lot of fresh, good stuff out there. It's a lot of old, stale stuff. So this is an interesting dynamic at play. We will track it as time goes on. John Walkup, thank you for pulling up all those charts. I am Noah Rosenblatt. We are both from UrbanDigs. And don't forget, you guys got questions, we got answers. Please visit our forum right down here. And if you want any of the charts that John whipped up today, they'll be right over here in just a few moments. And please, guys, don't forget to check out of our webinar recently, Housing Analytics, How the Sausage is Made with Jonathan Miller and Cale Goodman. It was a good one right over there. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.